The automotive industry is in the midst of a transformative shift, one that is reshaping the future of mobility and the way consumers think about transportation. For decades, the focus was on internal combustion engines, with gasoline and diesel cars dominating the roads. However, the world is changing. Environmental concerns, stricter emissions regulations, and a shift in consumer attitudes have placed electric vehicles at the center of the automotive revolution. Governments around the world are pushing for greener alternatives, and car buyers are becoming more environmentally conscious, opting for clean energy over traditional gasoline-powered vehicles. One of the major players in this transformation is General Motors, a company that has been a staple in the American automotive market for over a century. GM, traditionally known for its broad lineup of trucks, SUVs, sedans, and luxury vehicles, has made ambitious promises to transition its fleet to electric vehicles. The company's commitment to EVs is seen in models like the Chevrolet Blazer EV, which was expected to be a crucial part of GM's strategy to take on rivals like Tesla, Ford, and Volkswagen. However, while GM has set its sights on becoming a leader in the electric vehicle market, the road to success has been far more complicated than initially expected. The Chevrolet Blazer EV was introduced with much fanfare as a stylish, high-performance SUV that would appeal to a wide range of customers looking for an electric alternative to traditional gasoline-powered SUVs. Positioned as a key part of GM's EV lineup, the Blazer EV was seen as a competitor to Tesla's Model Y and other electric SUVs coming from Ford and Volkswagen. However, the launch of the Blazer EV was marred by significant setbacks. Shortly after its release, GM had to halt sales of the vehicle due to critical software issues that prevented the cars from being delivered to customers. The problem was serious enough that GM could not allow customers to take delivery of their new vehicles until the software was fixed, resulting in delays and frustration among potential buyers. For a company of GM's stature, this was a major setback. The Blazer EV was supposed to be GM's answer to the rapidly growing electric vehicle market, one that was becoming increasingly competitive with the rise of companies like Tesla, which already had an established presence in the EV space. For GM, this model was expected to be a flagship product that would help propel the company forward in the transition to electrification. Instead, the vehicle's debut has become a cautionary tale about the difficulties of launching a new electric vehicle in such a competitive market. The problems GM faced with the Blazer EV raise important questions about the company's readiness to compete in the electric vehicle space. Consumers today expect their cars to be technologically advanced, reliable, and free from major issues right out of the gate. For those who had already placed deposits on the Blazer EV, the delays and software issues were a major source of disappointment. It's understandable that a company working on such a large-scale transition to EVs would face technical hiccups. But these issues highlight the risks that come with launching a new product in such a competitive environment. When customers spend hundreds of thousands of dollars on a new car, they expect a high level of reliability and functionality. Software glitches or delays that prevent them from taking delivery of their vehicles only erode trust in the brand. Trust is paramount, especially as GM competes not only with traditional automakers, but also with companies like Tesla, which has a commanding lead in the electric vehicle market. As of now, Tesla has a well-established brand, an extensive network of charging infrastructure, and a loyal customer base. GM, on the other hand, is still trying to catch up, and issues like the Blazer EV's troubled launch only complicate its efforts. For GM, the Blazer EV was a significant opportunity to establish a presence in the rapidly growing electric vehicle market. However, the company is facing challenges from a range of competitors that are well established in the EV space. Tesla, for example, has built its reputation on innovation, efficiency, and performance. The company's vehicles have become synonymous with electric mobility, and its influence is only expected to grow as the market continues to expand. Ford and Volkswagen have also thrown their hats into the electric vehicle ring, offering new models like the Ford Mustang Mach-E and Volkswagen ID.4, both of which have garnered significant attention. These competitors have not only had a head start in the electric vehicle market, but have also been able to establish themselves as leaders in EV technology. Tesla, in particular, has become synonymous with electric vehicles and is already light years ahead of GM in terms of brand recognition, customer loyalty, and charging infrastructure. For GM, this means that the company is fighting to catch up while facing significant challenges in terms of both quality and production. One of GM's most critical challenges right now is maintaining its reputation for product quality. A series of recalls and quality control issues has raised concerns about the company's ability to deliver reliable vehicles. In recent months, GM has faced significant recalls, including one that involved approximately 449,000 vehicles due to a serious braking system issue. The recall affected popular models such as the Chevrolet Silverado 1500, Chevrolet Tahoe, Chevrolet Suburban, and the Cadillac Escalade. The issue related to the electronic control module, ECM, which could fail to alert drivers to low brake fluid levels. This failure could potentially lead to a loss of braking power, increasing the risk of accidents. A recall of this magnitude is a major problem for any automaker, especially when it involves vehicles that are known for their premium pricing and high performance. When such issues arise, it's not just an inconvenience for customers, it's a blow to the company's reputation. Consumers expect their vehicles to be safe, and when a problem like this arises, it can leave lasting damage to a company's image. This is especially true for a company like GM, which has a legacy of producing reliable, safe vehicles. The recall not only tarnished GM's reputation for safety, but also made potential buyers hesitant to trust the company with their next vehicle purchase. But recalls are not the only product quality issue GM is grappling with. In addition to safety-related recalls, GM has also faced complaints about the mechanical reliability of its newer models. For instance, owners of the Chevrolet Silverado ZR2 have reported significant engine and transmission issues after just 1,500 miles of use. These kinds of mechanical problems are especially concerning for buyers who are paying premium prices for these vehicles. For consumers, it's not just frustrating to deal with broken-down vehicles early in their ownership experience. It also raises questions about GM's ability to produce durable and reliable cars that will stand the test of time. These quality issues are beginning to affect GM's financial performance. The company's stock has suffered as a result of these problems, and investors are taking notice. GM's stock value dropped by 14.29% in 2023, and by the second quarter of 2024, it had fallen another 21.43%. Such dramatic declines are a cause for concern for any company, especially one that has historically been considered a major player in the automotive industry. For GM, these drops in stock price indicate a deeper issue. The company is facing mounting challenges in maintaining profitability, and the recalls, quality issues, and declining stock prices are contributing to an increasingly uncertain future. One of the primary drivers of GM's financial struggles is the rising cost of production. The cost of materials has been increasing due to inflation, which is affecting margins across the entire automotive industry. At the same time, GM is under pressure to keep prices competitive in a rapidly changing market. Consumers are becoming more discerning, and they want to know that they are getting good value for their money. As GM grapples with rising production costs, the company's margins are being squeezed. This financial pressure is especially evident in the company's electric vehicle segment, which is still not profitable. Producing electric vehicles is an expensive endeavor, and GM has admitted that it is losing money on its EV production. Both CEO Mary Barra and CFO Paul Jacobson have acknowledged that the company is taking a financial hit as it works to ramp up EV production. The company has set a target to become variable profit positive for its electric vehicles by the fourth quarter of 2024, meaning it aims to make more money from EV sales than it costs to produce them. However, achieving this goal remains uncertain, especially considering the current challenges GM is facing. To navigate these financial challenges, GM is relying on its traditional vehicles, including gas-powered trucks and SUVs, to fund its transition to electric vehicles. The company plans to continue producing these vehicles for the next 10 to 12 years, using the profits from them to support its efforts to make electric vehicles more affordable and profitable. While this strategy provides some financial stability in the short term, it also creates risks. As the market shifts toward electric vehicles, GM could find itself caught between two worlds, relying on the profit from its traditional vehicles while trying to establish itself as a leader in the electric vehicle market. Another concern for GM is the question of reliability, especially as it prepares to roll out more electric vehicles. Historically, GM has struggled with reliability issues, and Consumer Reports rated Chevrolet poorly for reliability with a score of just 42 out of 100. For a company with such a long history in the automotive industry, a reputation for unreliability can be a significant obstacle. With electric vehicles being a relatively new technology, consumers are understandably cautious about whether these vehicles will be dependable over time. Reliability is even more crucial in the electric vehicle market because EV technology is still unfamiliar to many consumers. If GM cannot demonstrate that its electric vehicles will perform well over the long term, it will struggle to win customers who might opt for a more reliable brand like Tesla. In conclusion, GM faces significant challenges as it navigates the shift toward electric vehicles. The company is dealing with a range of issues, from software glitches and recalls to rising production costs and a struggling stock price. As GM works to make the transition from traditional gas-powered vehicles to electric ones, it is encountering obstacles that could hinder its success. To stay competitive in the fast-evolving EV market, GM will need to address its reliability concerns, resolve product quality issues, and find ways to make its electric vehicles profitable. The road ahead for GM is difficult, but the company's ability to adapt to these challenges will determine whether it can maintain its leadership in the automotive industry as it moves toward a more sustainable future. As GM continues to face these challenges in its transition to electric vehicles, the question remains: can the company overcome its current hurdles and successfully compete in the EV market? Or will competitors like Tesla and Ford continue to dominate the space? We'd love to hear your thoughts on GM's journey to electrification. Do you think they can bounce back and become a leader in electric mobility, or are the obstacles too great to overcome? If you found this analysis interesting, don't forget to like and subscribe for more in-depth content like this. Comment below with your opinions on GM's future and the broader EV revolution. We look forward to hearing from you.